Joining me now is the Bear Traps Report founder, Larry McDonald. Larry, good to see you. Thank you so much for being here. I want to get your take on what drives markets going into the new year. And I guess let's start with the Fed. Lowering interest rates this week, but also making a change in its portfolio plans. How do you assess what the Fed did?
Well, everyone watching us right now has to buckle up and understand what just happened. The Federal Reserve just cut interest rates and restarted quantitative easing with the Atlanta Fed GDP at 3.5%. Okay, that's good growth. So we're cutting and we're expanding the Fed balance sheet with growth. CapEx on AI just in 24 and 25. I should say 25 and 26, $1.2 trillion just for 25 and 26. So that's a lot of juice coming into the economy right there. A lot of, and then on the fiscal side, you've got a $1.8 trillion deficit. It's tough for the Trump team because if Biden's running over $2 trillion deficits, they can't cut too fast or they'll throw us right into recession, right? So your $1.8 trillion deficit, which is about 6% of GDP, that is the ultimate setup for hard assets, and this colossal migration we saw in 25 is now going to move into 26.
So hard assets being things like gold, silver, commodities. I mean, I guess my only pushback there would be, look, Larry, there's some $8 trillion right now sitting in money market accounts. Isn't it typical that when you've got that kind of money sitting in quote-unquote cash, money market accounts, that as interest rates come lower and you start seeing 3% and lower in your money market account, you're going to move that money into stocks? And doesn't that put the stock market in a place to get a real tailwind in 2026?
Well, I think for value stocks, yes. So what happens is when you go into this new regime of higher rates, sticky inflation, it's great for value stocks. But remember, the evil thing about the market today, anybody with a 401k has to realize this. The top two stocks in the S&P, for the love of God, are now close to 15% of the index. So NVIDIA and Microsoft. And they're trading at 15%. So Maria, my whole career, the top two stocks in the S&P were always 3, 4, maybe 5% of the S&P in the 90s, 2000s. So now, so if you have $1 million in the market, $140,000 is in two stocks. That's a fiduciary problem for any stockbroker putting money in the S&P 500. You got to wake up to that. And they're trading at 23 times sales for NVIDIA, and Microsoft like close to 14 times sales. So there's just 36% of the S&P is in these AI stocks, and not much capital is in the energy infrastructure that's going to support the growth for AI stocks.
It's a great point to make, and we have to underline that point that you're making. You're not against the AI trade. You're just looking at the AI trade differently. You don't want to follow this trillions of dollars into this build out of data centers. You want to focus on the AI power trade is what you call it. And that's natural gas, copper, coal, power grid stocks. And you also like Latin American ETFs. But is that what you're saying, get out of these big hyperscaler technology names and get into the actual nuts and bolts of what's building and driving the AI data centers?
Right. It's just like 2000 where the crowd rushes into the big high-profile names.
Right.
Right now, you can buy natural gas equities with 10% free cash flow yields, great dividends. They're buying back stock. And the power grid is so old, 50 years old in some places, 30 years old in others. And I think that's the big thing. I think we're going to have a crash next year in NVIDIA because of the grid stress. And you know what word I'm hearing almost every day now? Is NIMBY, not in my backyard. And so the only way NVIDIA is going to grow from here, there's about 830 data centers expected to be built in the next 5 years.
Wow.
And if there's risk because of NIMBY, not in my backyard, not enough power infrastructure, NVIDIA probably crashes, I think, next year 50% from the highs. And I think that wake-up call around the infrastructure problem and around the power grid problem, that's going to drive money into SMR stocks, small modular reactors on the nuclear side, the coal names, the gas names, the copper names as well.
All right, we will leave it there. Larry, always a pleasure. Thanks so much.
Thanks, Maria.